Hey everyone, welcome back to Corporate Decoder, the place where we unpack the money secrets hidden in plain sight. Today we are diving into a filing from INVO Fertility Inc. And let's just say they're making some interesting moves regarding their preferred stock. Stick around as we decode what this really means for the company. Before we get started, if you crave unbiased insights straight from the source, make sure you're subscribed to Corporate Decoder. And for even more exclusive discussions and analysis, join our Discord community. The link is in the description below. So what's the big news from INVO Fertility? Well, it looks like they've had an investor exercise an option to buy more of their special C2 preferred stock. This isn't just a small purchase, it's a pretty significant investment that could change how their preferred stock works. INVO Fertility is a company focused on fertility solutions, so their financial health and how they manage their funding are really important for their growth and ability to develop new treatments or expand their services. This particular report, an 8K filing with the SEC, is like a special bulletin. Companies typically use it to announce big corporate events that shareholders absolutely need to know about right away. Think of it as an urgent company announcement. The heart of this filing is about an existing investor, who they call the holder, using their right to buy more of something called Series C2 convertible preferred stock. This is like a special kind of stock that can be turned into regular company stock or common stock later on. The deal was originally made back in January 2024 and INVO Fertility joined in on it later. Now for the numbers, this investor decided to buy an additional 200 shares of this C2 preferred stock. The value of these shares is stated as $200,000 and importantly, they paid for it all in cash. This shows a strong commitment from the investor to put more money into INVO Fertility. This is a really interesting part. When the investor bought more shares, it changed the price at which this preferred stock can be converted into regular common stock. The conversion price has now been adjusted to 73.62 cents per share. This is a key detail because it affects how much common stock the company might have to issue in the future and what that dilution might look like for existing common stockholders. A lower conversion price means more common shares could be created if or when this preferred stock is converted. The filing also states that these shares were issued without being officially registered with the Securities and Exchange Commission. They are relying on certain exemptions, specifically Section 4AA2 of the Securities Act and Rule 506. What this means in simpler terms is that they believe this type of sale to a sophisticated investor doesn't require the full public registration process because it's not being offered to the general public. This is a pretty standard way for companies to raise capital from private investors. Let's zoom out a bit. INVO Fertility's common stock is traded on the Nasdaq exchange under the ticker symbol IVF. This is how most people can buy and sell ownership in the company. The fact that they are on Nasdaq indicates they've met certain standards for size and trading activity. This recent transaction, buying more preferred stock, is a private affair between the company and one investor. It doesn't directly change the stock price you see on Nasdaq today. However, the future potential conversion of this preferred stock could impact the number of common shares available and therefore affect the stock price down the line, especially if many investors convert their preferred shares. The folks signing off on this report are usually high-level executives. In this case, Stephen Shum, the Chief Executive Officer, signed the document. This means the CEO and the company leadership are aware of and responsible for this issuance of stock. This is a standard sign-off to show that the company is properly reporting the event. Interestingly, the report is dated September 12th, but the event happened on September 8th. This just means they are reporting the event within the required time frame. Companies have a few days to get these filings out after a significant event occurs. Now let's really get to the heart of it. While this filing doesn't have a detailed financial table in the traditional sense, it reveals a crucial piece of the company's funding puzzle. The purchase of 200 shares of Series C2 convertible preferred stock for $200,000 is essentially a capital infusion. From a Warren Buffett style analysis perspective, we're always looking at how a company is funded and what that means for its future. This private investment signals confidence from an institutional investor. They are putting cash into the company, which is essential for a company in the fertility sector that likely needs ongoing investment for research, development, and market expansion. The key takeaway here isn't a specific revenue number or profit margin from this filing, but rather the structure of their financing and the activity of their investors. The adjustment of the conversion price to $0.73620 per share is a critical metric. If the company's common stock price is significantly higher than this, the holders of this preferred stock have a strong incentive to convert their shares, leading to more common stock in circulation. This would dilute the ownership percentage of current common shareholders. We need to consider the company's overall financial health outside of this specific transaction, but this report highlights one avenue of financial activity. They are using a mix of equity financing, both public through NASDAQ and private through these preferred stock tills. The risk here is if the company's value doesn't grow sufficiently, the conversion of this preferred stock could lead to dilution without a proportional increase in the company's overall worth. Conversely, if the company performs exceptionally well, this conversion could be a sign that the investor sees significant upside and is participating in that growth. In assessing INVO Fertility's direction based on this filing, we see a company actively managing its capital structure and engaging with its investors. The story here is one of continued private investment and a potential future increase in the number of publicly traded shares. The company's ability to grow and achieve its strategic goals in the competitive fertility market will ultimately determine whether this preferred stock issuance proves to be a smart move that fuels success or a decision that leads to significant dilution for common shareholders. Now, looking at this filing more broadly, INVO Fertility appears to be navigating the typical challenges and opportunities of a growth stage company. They are securing funding through mechanisms that are common in the biotech and healthcare sectors. The strength here is their ability to attract institutional investment, which can bring not just capital but also expertise and strategic guidance. A potential weakness, or at least a point of close observation for investors, is indeed the potential dilution from convertible securities. The main opportunity is that this capital infusion, if used wisely, can accelerate INVO Fertility's growth and product development. The risk is that the market doesn't value the company highly enough in the future, making the conversion of this preferred stock a less favourable outcome for existing common shareholders. In conclusion, this 8K filing from INVO Fertility doesn't present a full financial picture, but provides a snapshot of a significant private funding event. The key numbers to watch are the conversion price and the potential number of shares that could be issued if conversion happens. This is a company to keep an eye on, especially concerning its ability to translate investment into tangible growth and profitability for its shareholders. Alright, that's our breakdown of INVO Fertility's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.